Recording. Here we go. Awesome. Hey, Dora. Cool. All right. Welcome to Saturdays with Eddie. Today is April 1. It is not a joke. The only joke in the chat is that I'm giving away $1,000 to everybody on the call. The first 10 people get the $1,000. $1,000 US. It's all in SIM money. I guess that's the April Fool's joke, right? Nice. All right, cool. So yeah, this is educational, by the way, not financial advice. And we're going to talk about options. There's no question that is dumb. I want you guys to ask your questions. If you're new to options, you're more than welcome. This is the place for you. If you've been trading options for a while, this is still good for you. So we'll try and find your answers. So I think one of the things that one of the questions, so we have a few questions: how to exit a trade, adding stops to the trade in progress, momentum, trend. But before we get there, let's get a feel for the room. Who's new to options? Who's just new, basically? You know, maybe you've traded options in your sim, never traded them in your in live. So Stephanie's new. And she's new to this session, or she's new to options as well. Where is Stephanie? Stephanie, feel free to open up your mic or video or something. Tell us what you're looking for there, Stephanie.
Hi, Eddie, and everyone. I'm new to options. I know a little bit about it, but I'm new to it, and I'm still sort of a baby trader. So.
You said a baby trader, all right? Okay.
Yes.
Okay, nice. And I'm thinking you're trying to make some money using options. Is that right?
Yes, I want to focus on options.
Got it. All right. Never traded options before?
I did one option trade before, and I lost. I held on to it too long. So I just need more. So that's when I stopped, and I just said I need to take a step back and get some more education.
Got it. So that's a good topic. How about we do an options 101 kind of thing, kind of deal? You know, like how do you even make money using options? So this might be a little boring to those who've been trading options for a while, but I think it's important because this session is really for everybody out there who's looking for a way forward, right? You're looking for how to get into these, how to make these, this side hustle into your main hustle if you want, and how to be safe as well. Safe in terms of risk management. That's what we talk about, safety. Because we can teach you how to make the money. That's not a problem. But if we don't teach you how to keep it, that's a problem. Yeah. All right, good. All right, got a few questions there in the chat as well, directly to me. We'll take care of those. I'm going to share my screen here just so we can be looking at about the same thing. So tell me when you can see it. Desktop number 2. I think you can see my screen.
We see SPX.
Yeah, I think you can see it. So I'm going to just, you know what? How about just make it full screen? Well, there's a reason I don't go full screen. So I will go instead like this. So here's the reason why I don't go full screen. When I go full screen, it covers the top right. And sometimes I'm clicking on things on the top right to show you stuff. And on my little camera there covers stuff. So I'm going to flip back and forth between full screen and just resizing it. Cool. So how do you make money on options? You have to think in terms first of how do you make money using shares. So this might be a little repetitive, like I said, but let's start there. Let's spend maybe 1 or 2 minutes on that. If I want to make money using shares, say Apple, and I want to make $10, then I'd be looking at a chart of Apple and deciding that, there's a likelihood that it's going to go up or down. And I decide that, the only way that I know how to make money on this is to buy 1 or, 10 shares of Apple. Maybe I've got $1,000 or a couple $1,000 I want to spend. Then I'd calculate, my $2,000 and say, well, I've got $2,000 to spend, and Apple is trading at roughly $155, which means that I can afford about 12 shares. Is that about right? And then I decide I like round numbers. So what am I going to do? Instead, I'm going to simply just buy 10 of them. How about that? So I can buy 10 of them. So I'm going to go over here, buy 10, and put in a price, whatever, and confirm and send. Go ahead and do that. And I get, and I buy at what, 154.83. So now I just need to wait for it to go up, right? And if it goes up by $1, then I make what, $10 times $1. Is that how you can make money using shares? Yeah, it's a pretty slow way, pretty mundane way. Also, it means that I spent way too much money, because I spent 154 times 10, which means that I spent what, 15, would you say $1,540, give or take? Yeah. So $1,540, what could I have done differently to have a better return on that investment? So I don't like spending 1,500 and only making $10, right? No bueno, no good. So instead, what I'm going to do is I'm going to go ahead and sell these. So I'm just going to go right click on these, create a closing order, and sell my 10 shares. And by the way, this is one way that you can exit a trade. If you're in Thinkorswim, go ahead and sell your 10 shares and put in an order, wait for it to go, and an unexpected error occurred. Yeah, go ahead and look at that. What happened? So why did it didn't work, did it? I haven't sold shares in so long. Okay. Got my working order there, and I set it to sell at 154.42 because it's losing, right? It's losing about $4 over there. And I'm trying to get out of these so that I can buy options. So I'm going to go ahead and lower my price and see whether that is going to help us get out a little faster. So I'm just opening the padlock there. There we go. We sold at 154.26, made a loss. But there's a better way. There's a better way of making money. So we lost $5.70 in that trade. If this was an options trade, that loss could have been a little greater, but we'll see how best way is to mitigate that. A better way to have traded would recognize that stock is actually reducing in price. So a put is what you employ when you think that the price of the underlying is going to go down. Is that clear for most people? A put, why I would go for a put? Yeah, you'd go for a put. Yeah. So I'm going to go back to the trade. Well, I was never there, but this is how you get to the options chain on Thinkorswim. Click on trade and then choose an expiration date. I'm going to choose maybe April 28. There are better choices. But this is what we're going to choose. And I'm just going to do a simple at the money put for the 155 strike. I'm just going to buy that. Let's see how that works. Okay, just going to buy one. So just bought one at $5.80. Now, if I go here to my charts and see what's happening, I'm actually going to, because I'm on the daily, I want to see what's happening at the micro level. The micro level is the 5-day 15. That's what I call the micro level. Don't hang out too much on these micro levels, but I want to see what's up. Oh, it's up and down, something happening in the market. So it's going up and down, and we bought a put because we believed that it's going down, right? The price is decreasing. Are we right? I don't know. It looks like it's flashing back and forth. The real way to figure out whether you're actually making money is to go back to the monitors tab and then look at the equities and equity positions, and then you can see your PL open. PL stands for profit loss. Yeah. I can fix this in another way and add another column called PL day. That tells me today's activity of what happened today, right? And the difference between PL day and PL open is that PL day talks about for today, ever since I started the day open today, what kind of activity has happened in terms of my P&L. PL open, if this number is 0, it means that you don't have any open trades, or you're at break even in whatever you are, one of the two. PL year to date, from when I started trading January 1 this year, what has been the activity on these particular symbols? So hopefully that tells you where to look when you're trying to figure out whether you're making money or not. But the most important one is the PL open. In my opinion, if you're already inside of a trade, then PL open is where you want to figure out. When we entered this trade, we did not use a stop. Yeah, so I'm going to answer the question is, how do I add a stop to a call or a put that is already in progress? There's several ways that you can do that. But the easiest way, first and foremost, is to figure out where you need to put the stop. So let's evaluate. We bought the 155 strike, yeah? We bought the 155 strike, and we paid $5.80 for it. That's how much we paid. And we didn't talk about the thesis of what we are expecting to make from it. That should have been, what we would have talked about all the way before you even placed this trade. So we've skipped like 1,000 steps already, right? Jamie, we've already skipped 1,000 stops. So, but now that we're here, we're trying to figure out, right now we're down $5. How do we not lose $500? Would you say that's a good idea? It's a good consideration, right?
Yes, that'd be a great consideration.
I think that would be a good consideration. We're trying not to lose a lot of money. So even though right now we're only down 250, it means that we could be down, a whole lot of money. So how do we give ourselves peace of mind? That is the question at play right now. So to consider that, we are saying that if we evaluate our thesis, we are saying that if price continues to go down, right, on this upward trade, then we are going to continue to make money because this is a put, yes?
Yes.
But if price goes in the opposite direction like it is doing now, then that is not in our favor, right? So,
correct.
So what we need to do first is identify, well, how far up would it have to go in order for us to feel so much pain that it's unbearable? Yeah. We have to think in terms of, how do we prevent that from happening? Or if it does happen, what are we going to do? And then on the other side, we have to think in terms of, well, what's our target? So now we all of a sudden thinking in terms of what's the worst case scenario, what's the best case scenario, or what's the optimum scenario. So I'm going to move over here to the daily time frame. I'm going to look at a few levels. So would you say that that's a level at the moment for 156?
I would look more at the 162.
162. Okay. All right. Let's see. 162, because that's not it. And we keep going up and up. And
to the left.
To the left, to the left. So you're thinking 164, maybe?
Yes.
All right, 164. All right. All right. Let's validate that. So remember, we're looking at everything above today's candle. So as long as we're going up and up, I think this is your level right here. I think 158 is your first level. So I'm going to remove that. So I'm going to call that as my resistance. But also on the downside, I'm expecting that if I'm going down, then or if this price is going down, would you say that this is a point where price changes direction?
I think there's one before that.
Okay, you think this one?
Yes.
Zoom in and take a look. You are right. So this is where price changes direction, and I would call this my support. Okay. If things were to go well in our favor, considering that the price right now, let's call it 155, right? 155. If things were to go well in our favor, then it would be a 6-point move. Would you say that's about right, Jamie?
Yes.
Yeah. So targeting about how many points? The full 100% or a percentage of that?
Well, it could turn around at 150, 250, 153.
All right. So let's be modest and go maybe $3. How about that?
Okay.
$3 is great. Yeah. So that's a rudimentary calculation. There's actually a science behind the right way to calculate that. But for now, we'll just say that we'll go for about $3 movement, which represents a number in terms of premium. Remember that every time that this goes in our favor by $1, then we're going to have a benefit of about 46 cents. When we entered the trade, it was about 50 because this was in the money, but now that position has dropped. So let's just say that we want about $1.50 more on it. But on the other hand, let's say we don't want to lose more than $50. Shall we go with that premise?
Yes.
All right. So we don't want to lose more than 50 cents, which is representing $50. And we want to target making about $150. Yeah. So what I would do is I would go over to the monitor and I would look under the equities and equity options. I would right click and create the closing order. This is the first step. So I'd create a closing order. Remember, we bought these for $5.80. We went in without a stop loss or without a take profit. We're trying to fix that. So I would go in and create a selling order. That's the first step, right? The next step I would do is I would change this from a single order into an OCO order. One cancels the other.
Okay.
You with me so far on that?
Yes.
It is different. You might be thinking, well, at one time I've said fast triggers OCO, and now I'm saying OCO, and that would be correct because there's different cases. When you are entering a bracket order for the first time and your order has not been filled, you would be going for the fast triggers OCO. But because you're already inside the order, your order has already been filled, you'd go for plain old OCO. Okay. So now that we have an OCO, we're going to create a similar or sell order. And I'm just going to right click anywhere on these and I'm going to create a duplicate order. Now they look exactly the same, right? They look exactly the same. A couple of things I want to fix. First off, I want these to be GTC so that this happens not just today, but it's good for 90 days. That's number one. Second, I'm going to designate one of these to be my take profit. So remember, we said we're looking for what? About $1.50?
Yes.
All right. So $1.50 from where we are right now would, let's say it's 550. Shall we say 6, 7? How about we shoot for $7?
Okay.
That'd be good.
Yes.
I'm going to shoot for $7, given that our original sale price was $5.80. So if we're looking for 150, I'm going to pull out my calculator here. 580 plus 150 is about $7.30. I'm going to go for $7. Yeah.
Okay.
All right. On the downside, we decided that we do not want to lose more than $50. So let's think about that. If we bought these for $5.80, then it's quite possible we've already lost $50, right?
Correct.
Because we are at now 525. So why don't we say that, you know what, let's go for $80 as our threshold and say $5. So somebody explain to me, if I have a stop loss and I'm going to choose these, I'm going to change these from limit to stop. So I've got two orders I'm trying to send over here. This is my take profit, the $7 one, and this is my stop loss at 5. So Jamie, you probably already know this, but I want to hear from somebody else. If I get stopped out at 5, how much will I have lost at that point? maybe I should check my chat to see if people are answering that. So Cheryl thinks $80, and that would be correct. Yeah, that's right, $80. So, and if I got, and if this order closed at $7, how much would I actually make? About $120, right? So not a bad deal. Not bad deal. So I'm going to push confirm and send, and this is going to create a bracket order and send. And where did it go? Is a question, right? Where did it go? That's the question somebody should be asking me. What happened? Where did that go? Well, where it went is it went to the monitor tab. It's in my working orders, right? And notice that it is a bracket, meaning that these two are mutually exclusive. Only one of these can happen, either your take profit or your stop loss, not both. Only one of them can happen. Jamie, did I answer your question?
You did. Thank you.
You're welcome. All right. All right. So we're going to let that one play out. Again, this is an example order from way back in March. That was last week, I think. Yeah, maybe a couple of weeks ago, March the 20th. And we'll just let it be and see how it works. Most important thing when you're going in on a swing trade, that GTC is important so that your order does not drop off at the end of the day. In fact, that's a classic scenario. You've got a bracket order, but you forgot to put in GTC. They were all day trades. I mean, a day time in force. And what happens at 4 o'clock in the afternoon? The order drops off the system. And then the following morning, you're thinking, well, I got to stop. I got to stop in place. But no, you do not, because it dropped off. So to prevent that from happening, always remember your GTC. GTC, unless it's a day trade, then go with the GTC. And that will help you out. Okay. Let's see. All right. So adding stops to the trade in progress. We've done that. How to exit a trade. I think those are one and the same thing. And I think if I go to the chat, I should have at least, yeah, there we go. It should be represented by these bubbles right here. So yeah, there's bubbles. And I think you can also move them up and down. If you are in advanced mode, you can move these stops up and down. So right, momentum. Let's talk about momentum. Momentum is that the same as direction? Somebody explain. What do we know about momentum? Yeah. It's just, what direction this thing is going. So how do we figure it out? How do we figure out momentum? Especially for swing trading. Yeah. Who asked this question? This was what? This was that you, Kendra, that asked about momentum?
Yes, that's me.
Your mic is probably off.
Can you hear it now?
Okay, cool.
Okay, yeah, that was me.
Cool. The way I think about direction when we talk about direction is you're trying to figure out what side is the market going, or what's the price trending. Is it going up? Is it going down? Is it going sideways? And I want to put it to you that if you're a swing trader, you really shouldn't look for this momentum or this direction early in the morning. Yeah, you don't want to look for it early in the morning, like at 9:30, 9:35. So I'm always telling, swing traders, roll out of bed about what, 10:15? Is that right? Yeah, that's the time you want to start looking at the market, because several things will have happened. Number one, that direction will have been set for you. You don't have to think too hard about it. Just look at the candles. In fact, you can look at the 15-minute candles at that particular moment to see where the trend is. So,
hey, Eddie.
Yes.
You said roll out of bed at 10:15 Eastern Standard Time?
Always market time. Yes, Eastern time.
Okay.
Yeah.
Okay.
Yeah, 10:15. If you're in the Pacific, you're already too late.
Yeah.
If you're in California, you missed the whole day. What's that? 1:15? Yeah. So yeah, 10:15 Eastern time. Oh, I'm always talking market time, by the way, which is yeah, Eastern. Right. But why wait 45 minutes, right? Why wait 45 minutes to figure it out? It's because a couple of things have happened. The premiums tend to lower much, drastically, especially after the first 1 hour. So if you're trading 0 DTE, or even if you're trading, well, you're probably not trading DTE if you're a swing trader, but these premiums tend to cool down a little bit in prices after all the volatility. There's 2 times of volatility. There's in the first 1 hour of the day, 9 o'clock to 10 o'clock. And there's the last hour, which is 3 o'clock to 4 o'clock. So that hour is actually called power hour. Yeah. So in most trading circles, that's what it's known as, the power hour. It means that that's the time to either make your money or lose it. Yeah. You don't want to trade in that hour. I don't recommend it. So for momentum, I would say strategy number 1 is wait it out in the morning. Don't go in as early as possible. No, instead, give yourself that 45 minutes to 1 hour, get into the market. And then at that time, you will have figured out the direction. You are not going to miss your opportunity. Yeah, that is the fear. That's the fear of missing out, that if you don't get in early enough, then you're going to miss the opportunity. Well, if you get in too early, then you are going to be what's that? It may be good or may not be good for you, but more than likely it's not going to be good for you. So the reason I say that you're not going to miss the opportunity is because for a swing trade, you are not trading for that day. Your thesis is supposed to play out 45 to 90 days. So if you're trying to swing trade like a day trade, or day trade like a swing, or vice versa, then you're doing it all wrong. Stick with one strategy. Don't worry about what happens intraday, during the day. And you don't want to worry about that. Instead, what you want to do is make your thesis based on the daily time, the daily candles. And if you believe that over the next few days, then this price is going to come down to the 150 something, then that is what your strategy is based on. If your strategy is that it's going to go over to the 160 area, then, there's your strategy. So don't trade for the long term on a short-term basis. So that will fix your direction issues, which means that you have to know how to read the chart pretty well. Yeah. Pretty well. You have to know what price tends to do. It tends to go up and down. Did I just say that? Price tends to go up and down. Yes, it does. But in a certain formation, that's the key. Price will go up and down in a certain formation. So you notice that we've got a lot of, what shall we call them? V's or W's? Or both. Peaks and valleys, right? Price goes up, price goes down, price goes up, price goes down. So what you're looking for is, what is the general trend? What is that resting area? Where are we at the moment? This is called consolidation. And then we broke out to the bottom. What happens after we reach a buyer zone or a support area? We tend to go up. So your question is, are we in a resistance level, or are we in a support level? If we're in a resistance, then you know that the next thing is that we're going to go over to the support. How long do you anticipate that it's going to take to get down to this level? So I'm pointing over here to the 149, maybe all the way down to the 148. How long? We can count the number of candles because each of these represents 1 day. So if we think of these as business days, then we can estimate that, well, in about a week or so, if this trend continues, then we should be here in less than a week, or give or take. Yeah. And then once that happens, what's likely to happen? it's likely to bounce up. Let's see what happened. This was May the 20th, right? So I'm going to, if that was May the 20th, let's see what happened after that. This is Apple. Yeah, this is Apple. Let's close this side and make this one as big as we can. So I'm on the daily, yep. So this was the 20th. Yep, 20th instead. What happened? We actually rolled all the way up. Yeah. So my short-term thesis would have busted because I bought a put and instead it went up. So it's a good thing that Jamie said that he needs a stop. And there's a likelihood that I'll be giving the market about $80. Right? I'm protected on the upside by about $80. That's our stop. So Jamie, you brought a really good point. Risk management. Yeah. Huge. Everybody, you should all send $5 to Jimmy. That's another April Fool's joke. Don't do it. Love this. Yeah, see money. Yeah, we're gonna send it over to you. But Kindra, there to answer your question, in terms of momentum, we want to delay as much as possible during, at the beginning of the day to get our trend correct. And then we can pick that direction and go with it. Remember, you're planning or you're plotting for a few days out as opposed to just that one day. If you go for just that one day, then you may be tempted to make a decision that is you don't have enough information to go on. Yeah, hopefully that helps. I'm not sure I answered that one as best as I could, but hopefully that helps.
No, that helps a lot. And then one other question I had with that is when you're like, say you're counting your candles so you can estimate the time that you think it would take. So when you're putting in your trade for a swing trade like that, how far do you go out on your date on the options chain?
45 to 90 days.
45 to 90 days. Okay.
Yeah. And not that we want to stay in a trade for 45 to 90 days, but instead what you're buying is time insurance.
Okay.
Yeah? If you notice when you go to the options chain that this 155 strike 39 days out is, it cost us about $580. And if I actually went out 45 days, let's say 45 to 90, if I went to May 19, that same 155 strike would have cost me what, $740, right?
Right.
The further out I go, the more expensive it becomes.
Okay.
But the less fluctuation you get in terms of theta, you don't get theta decay that far out. So you get the benefit that your premium is shielded in terms of how much it is moving, but also the fact that it is not decaying. If you have to hold it over the weekend or over a holiday weekend or something like that, it is not going to decay as much as if you bought a cheaper option. So if you went, say, 4 days out, then you'd only be spending $255. But guess what? Come Monday, this is going to be severely challenged, even if price remained at about the same price, at the same level. In this particular example, I chose Apple, which doesn't move a whole lot. It's got a $3.19 ATR, meaning that it's going to hover around that area. That $2 and whatever change has to go down to zero as quickly as possible.
Okay.
So you don't want, even when it is at the money or slightly in the money, it still has to go all the way to zero before expiration or at expiration.
Okay.
Very, very little intrinsic value. It has, most of its value is actually extrinsic. And we know that extrinsic value is what decays. Intrinsic value does not decay.
Okay.
Right? Intrinsic value does not decay. Extrinsic value has to decay all the way to zero. Right? How do we know that? We can actually add some columns here called intrinsic. And just to show people who have not traded a whole lot what the difference is here. So I added two columns here, one called intrinsic value and the other one called extrinsic. And you already know that when you're talking about calls, every strike that is less than the current price right now is 154. So everything below 154 is in the money. Is that right? We should know that.
Yes.
That's fundamentals 101. We should know that the strikes that are below the current price, when you're referring to calls, those are in the money. So everything that is in this shaded area is in the money. You notice that it has got both intrinsic and extrinsic value. When we go out of the money, meaning that every strike that is above 154.89, right? That means from here downwards, the intrinsic value is 0. It has no intrinsic value whatsoever. So when you buy an out of money contract, you're buying one that it's almost worthless already. Yeah, you're pushing against, you're rowing upstream instead of downstream, right? You want something with value. It's like going to the store, going to a car dealership, and you tell them, you know what, I don't need the steering wheel. You know, bring the price of this thing down. You know, yeah, I think I don't think I need the steering wheel. How do you think that would fly?
It would.
Wouldn't fly too well, would it? Yeah. Or you tell me you don't need the keys, you know, you can do something to it. So no, get the whole deal, right? Get the whole deal. Don't buy out of the money. Instead, buy slightly in the money, or no, buy at the money or slightly in the money. How much? Between 50 and 70 is usually a good area to play in. I talked about calls. Let's talk about puts on the other side. So puts are always going to be on the right side, and trying to figure out what's in the money for puts. It is going to be all those strikes that are greater than the current price, the price of the underlying. That's what we're referring to. So a little bit of options 101 over there. When you're looking at the puts again, and you want to buy a put that is at the money or slightly in the money, you want one that is greater than the current price. Anything that's greater than the current price, that's what qualifies it as in the money or at the money. Then the deeper you go, the deeper in the money it becomes. So you want one that has a delta of at least 50, right? The more the better, but between 50 and 70 is usually a good choice. Yeah. And don't go for short DTE, even on, especially on equities and those kind of securities and ETFs. Go a little further out.
Eddie, would you buy 45 to 90 days DTE for both puts and calls?
Yeah, that's what I would do. That example was to show about what was I going to show? The value of puts and calls when you have a shorter DTE versus longer DTE. So the best way is to, like I said, go 45 to 90 days. So here we picked 39 as an example, but the optimum would actually be May 19, because this is between 45 and 90, right? So I wouldn't even choose 39. I probably would choose the one that is 60. Yeah.
Okay.
Yep. Good call on that. So, all right. Back to my good old template here. And I don't think this trade is going to go well based on the projections, right? We are at 530 right now. We are down $50. What do we do in this case? When you have lost faith in a trade and you think it's going to hit your stop, do you wait until it hits your stop? Do you continue hoping? I can see the PL open is fluctuating here between 50 and 65. Yeah, hopium. Do you cut the trade? How do you fix this? Because right now we're down $50 on that trade. We know that we have a stop at $5. So what would you do as a trader? What's the right thing to do? Do you wait and lose $50? You wait? Okay. You can do that. You can wait. And right now, if I got out, I'd probably lose about between 45 and $50, right? But if I look at the chart, it looks like it has turned direction. Now, if I had a full 45 to 90 days, I probably would wait, right? or I could let this stop out. If I chose to stop to stop myself out, meaning get out of the trade, and this is how you exit a trade. I'm going back to that question now. So remember, you can exit a trade when you're in profit or when you're in loss, right? When you're in loss, it means that you're trying to save that situation. You're saying that I know my risk was $80. I no longer want to risk $80. This doesn't look like a good deal. I'm going to cut the trade now. Or you could say that I was waiting to make $120. I've already made $100. I feel comfortable. I want to get out. Things are not looking so too rosy. Then you can always exit the trade, even though you have a bracket. So the way to do that is to go back to your monitor tab. Go back to your monitor tab, and you'd find any one of these, right? Preferably, actually, I take that back. You do not want to find any one of them. You want to use your take profit line, not your stop. I don't advocate for moving stops. Don't move your stop, right? Don't move your stop. Get out of the trade if you're trying to protect yourself or trying to prevent from losing further or trying to protect some gained profit already. Don't move your stop. Instead, close the trade. We'll talk about that a second here. Does anyone understand what I'm talking about? Moving stops. You all understand my argument for not moving stops, right? We don't move stops. Don't move the stop. Instead, work with your take profit. So I'm just going to right click over here and I'm going to do a cancel replace, right? And I'll do a cancel replace. And because I don't know what the current price is, guess what I'm going to do? I'm just going to unlock this padlock, and it tells me the current price now is $5.15. And by some quick math, it tells me that 80 minus 15, I'm going to be down about $65. Is that right? About $65. But I can also see that the mid price is 30, is 527. So I'm going to go for the mid price of 527 and see whether I can get out at 527. Since I've lost faith in the trade, I'm going to confirm and send and push that. And it looks like I got it sold for 527. So that means we took a loss of about 53 cents or $53. That's how you get out of trade quickly. You just go with the mid or the price that is in the current market and get out of it. Yeah, does that help?
So Eddie,
yeah,
the one that you left there, the other, is it still there?
No, because it was a mutually exclusive order. Remember, it had that link.
One or the other.
Yes, it was either one or the other. And when one happens, the other one gets canceled. So if I go over here to my canceled orders, I should see my stop got canceled. Why? Because the other leg on the take profit is the one that was executed, this one. So you see this link, the one that linked those two orders?
Right.
Very, very important. That's why we chose the OCO order type. If you don't use an OCO order type, then you can only either do a take profit or a stop order. But if you want to do both, then it needs to be an OCO. Remember, this is after you have entered the trade. Yeah, this is after you've entered the trade. If it was before the trade, let's do a quick example on that. And let's go to May 19. And let's do another bad trade. How about that? Let's go to do a bad trade. We're going to do a put, or shall we do a good trade? How about we do a good trade or a bad trade? Let's do a good trade.
Good trade.
Good trade. Okay, so we're going to pick an at the money strike, which is 155. Yeah, and has a delta of 56. So there's a couple ways that I could do OCO order, and the easiest one is to just simply right click on the ask column, right? Buy custom with OCO bracket, right? So that's what I just did. I right clicked and did with OCO bracket. Let me remove some of this noise here. And now gives me this dialog that tells me that I can buy this at $8.60 right? By default, Thinkorswim will try and give me just $100, which I want a whole lot more than that. Yeah. So there's a way to calculate that. And it also gives me a stop. But also notice that the time in force here is day. I want to make sure that this is always that this is a what did you call it? GTC. So I'm going to link all of that, change it to GTC, so it changes all of them at the same time. Yeah. Little known trick over there. Elizabeth, do you know how to calculate your take profit?
I think so, yes.
Good deal. So let's assume here that you want about $200, then you'd be selling these at 1060, right?
Right.
Yeah. Another way to do this would be to break this chain and do a plus or minus here. Make sure this says trigger or TRG, and that's equivalent to a +2. So +2 means here +2 in premium.
$2 off over the price that's there, right?
$2 over 860.
Okay.
Yeah.
Mhm.
And you can also go a little better and say that because I don't know how much I'm going to be filled, so I'm going to open this padlock here. And now I'm telling the system that whatever you fill me in at, add $2 to that. And that's the profit that I want.
Okay.
Because sometimes, let me first explain. When the padlock is locked, it means that I want this price and this price only. I do not want 8.66. I do not want 8.64. I only want 8.65. That's pretty rigid, isn't it?
Yes.
Instead, what I want to tell it is I want to open this padlock and tell it, give me this price or better.
Okay.
Meaning that if some person over there put a market order and they try to sell for like $4, I will get it. Or I can get it. Let's put it that way. Yeah, I can get it. So usually, especially in highly liquid and volatile in environment, then you will more than likely get a good price, as close as possible to 855, but not more than 855.
Okay.
On the other hand, because now this one is relative, I want to make sure that this one is also relative to the price that I enter the trade. Yeah. So I need to break this chain and say that I want to protect myself. Maybe I want to do a stop loss of $120. How about that? Make sense?
Yeah.
So negative 1.20, I'm saying that I'm going to put a stop loss of 1.2. Right? $120 is that. You have to think very carefully when you're choosing how much profit, how much risk. By the way, this is not a good trade because we've not done the math on this one, and this is not meeting our A+ requirements. So this is one trade we probably wouldn't do.
It's just a test.
Yeah, but it is an example and it is good for instructional purposes. So, but this is how you would do this, right? And then you would confirm and send. Once you confirm and send, then notice that 3 orders get placed. The initial one to enter the trade. The next one is to take your profit. And the last one, the order number 3, is where you do your risk management. Yeah. So that would take care of it in one order. Basically, you're sending all of that. That's one way. The other way is the step-by-step approach where you first enter the order and then create an OCO order.
So now once you enter it like this,
why don't I enter it like this?
Exit, if you enter it with this OCO, with this, with the 3-legged one all at once.
Yep.
When it comes time to exit, which one does it matter? When it kicks you out, it just kicks you out of all 3? If any of those things are hit?
Okay, so if we entered it like this, and let's go ahead and let's go ahead and enter the trade. How about that? Let's get into the trade. All right, so we got in at 855, right? And now we have 2 orders left. Remember, the first one is to get into the trade.
Right.
The next two, one is a take profit, one is a stop loss. So now we're back to the situation as though we just like we did in the previous example, you can manipulate either of these. The one that I recommend to manipulate usually is the take profit. The only time that I would manipulate the stop loss trying to think of a good situation, and I can't think of one. Can't think of one. If I want to lock profit, Jamie, what I would do is sell, close the position. Yeah, that's what I want to do. So
Eddie, what if it was going in your favor? Could you just put in a trailing stop?
I don't do trailing stops. No.
Okay.
Yeah, you can do a trailing stop. You know, that is an accurate or that is a legitimate way. But I don't think it's a good way.
Okay.
In my opinion, I either adjust the take profit or I close it out.
When
Yeah.
you say adjust it, what do you mean?
Adjust it. Maybe I can decide that, you know what, this thing has a potential of going all the way up here. So to make an adjustment, I can say that instead of shooting for just the 1055 or the +2, I could right click, cancel replace. And this time I would do what? I would change it to maybe, I don't know, $12. How about that? Yeah. Confirm and send. Now that would be replacing just that one leg and not all of them. So just that one leg. And let's see what happens now. So now my take profit is at $12 as opposed to what was it before? 10 something. So that's adjusting upwards. Yeah, that's adjusting upwards, which is fine. But what Leslie is alluding to, she is saying that, you know what, maybe the price is going in our favor. I should bring this stop up. Yeah. And you could do that. But let me ask a couple questions here to help you think about this. What do we know about a stop loss? What happens? Do you have control about the price?
No.
You do not. So when you have no control about the price, it means that I could possibly be in the money. I could also be in profit, maybe $100, $200, and then I bring up my stop, and then there is a spike downwards. What would happen in that case?
You'd be kicked out right away.
I would be kicked out right away at the market price, yes? And I have no control what that would be. It means that if there's an order for $140, guess what? Now I have pretty much thrown away all my profit, and yet I was up $200, for example. So for that reason, I don't move the stop loss. Instead, what I do is I take the profit. That is also known as see profit, take profit. You with me on that, Leslie?
I'm with you.
Yep. Yep. You see profit, you take profit. That's how you do it. So yeah, you don't, it's kind of like sitting at the casino, you know, just keep pulling those things and you think that's 777. I think that's what it used to be. I haven't been to a casino like 30 years. And the few times I went to a casino, by the way, I went for the margarita, not for the gambling. They make pretty good margaritas at the casino, by the way. Walk with me here. Walk with me here, guys. So that's the way that I would recommend. That's what you do. Yeah.
So now to exit this, if you wanted to just get out of this trade completely, you'd hit any of them and you'd be out of it, all of it, or you have to go and hit the specific one that you entered?
Yes, you go and manipulate your take profit. So if I clicked on the X,
forget the taking profit thing. You just want to get out. You're like, I'm out of here. I made my $200. I'm not doing anything. Just get out.
Yeah. Okay. So you go to your take profit, right click on it, do a cancel replace on that order, open up your what is it, padlock over here, push confirm and send.
And that kicks you out of all of them.
We will do that. Yep, it will do that. What's the current price now? Right now we are at 840 and we got filled at 855. At the moment we're down $15, right? Remember, we got into the trade at 8.55
Great.
and the current is at 8.40.
So you never go back to the one where the green one, the one that's the filled one. You never go there and click on it? That
Nope.
one?
Nope,
No?
don't even look at it.
Mm.
Nope. And you don't go to your canceled orders either. The most important screen you want to be on is this working orders and the equities and equity options screen down here to tell you where you are right now.
So on that equity screen one, can you go there and click to cancel?
You can, but you would be creating a duplicate. You'd be if you create closing order at this particular moment, then you would be creating a duplicate sell order. You already have a sell order up here.
Oh.
Yeah. So why do it again? Yeah. It's like driving through the Starbucks and you order your cafe, your latte, right? Then you reach the window and make the order all over again.
Well, Eddie, you remember that $1,000 that we are sending you for SIM money?
Oh, yeah. Yeah.
I'm doubling mine. You just taught me something new today. Thank you. I've been canceling in the wrong place all this time. That
Well,
explains my problem. Thank you.
You are most welcome. I'm getting a message. I don't know whether you guys are seeing the same thing, but it says unexpected error has occurred. And yeah. So today being Saturday, this is when Thinkorswim or TD Ameritrade does their maintenance. Is everybody aware of that? Yeah, this is when they do their maintenance. And so occasionally as they're doing their maintenance, you will see these. So this is not a bad thing. This is not a program malfunction. This is just a feature that that they use. So I always send the report to the development team. I'm all about helping them make this product even better than it is now.
Eddie, what is that blue 5.27 on near the lower right?
Over here, I think it
Yeah.
is something that on my previous screen, I moved something and it got stuck.
Oh, okay.
Yeah, I was modifying an order and I don't know, something got stuck on my screen. I noticed that. Yeah. Oh, sorry, that's the number of minutes remaining to when I will give $1,000, Dora.
SIM money.
Cool beans, cool beans. So let's see. Prices, we're now at 0, meaning we're break even, right? We're at break even. So Elizabeth, if you wanted to close this order again, you would not close it twice. You would simply go to your take profit, do a right click, cancel, replace. That way you're not getting that nasty error warning from Thinkorswim, that rejection message, which is cryptic because it appears there for like 2 seconds and we have no idea what it said. And then you have to go look for it in messages, that kind of thing. Yeah. Cool. I think that's all the questions that were there. But let's talk about me for a while. Go ahead.
That on demand where you can go backwards and pretend to be in a live time. How do you do that?
Oh, that one is a special secret sauce. That one.
Yeah,
I don't think
not everybody can get it.
No. That one is only available in the state of Georgia. Only the state.
I have to move, huh?
You have to move. You have to move.
Wow.
So to get to the on-demand, you first have to log into your live environment.
Okay.
It is not available from the paper trading, right?
Mm.
You have to first go to your live environment and then click on demand.
Ah.
Yeah. You can try that at home.
Okay.
It's gonna work. It's gonna work.
But then you're in your live account, so you shouldn't be playing with monies.
Well, here you can. Once you're in on demand,
Mm.
it is not live money.
Mm.
Yeah. So by default, on demand, you can see it here. It gives you like $100,000, right? In fact, that's what's going to tell you it's not your live account.
Okay.
Right? And you can reset the amount of money inside of your on demand, just like you can reset inside of your paper trading. Yep. So that is just a feature of another feature of on demand. Now that we're talking about it, is that you can choose whatever date that you want. So for instance, right now we are on March the 20th. I can click on a calendar, the date over here, but the way when you're live, you don't have this option, right?
No.
No, you don't. You can't change the dates. So when I'm on demand, I can move the date and the time. I can even fast forward. For instance, I can decide, you know what, let me see how this plays out. So I am going to speed it up, right? It's now speeded up, and then I'm just going to push on play. So I want to see how it works. Maybe I want to see, maybe I want to change these by 1 hour. Right now it's 10:48. I'm going to make this into 11:48 to see in 1 hour, where will it go? And I'm just going to push that. And it looks like it came down a little bit, and then no, we're still on the day time frame. Yeah, it came down a little bit and then started moving up. So on demand is a really nice feature for helping you learn your strategies. And I'm going to go ahead and answer one of your questions there, Elizabeth, because remember we said we adjusted this order and said that we want to take profit at $12. Is that right?
Yes.
And so far, we are now at $9. Remember, we bought these for about $8, right? I can go into my field orders and see $8.55, and maybe I just want to close out, get onto a plane, or do something. And I'm comfortable with the $57 in there already. This is just for example. Normally, you want a good, solid strategy and stick to it. Yeah. So what I will do here is, I guess PL for the day, I'm going to break even in about a minute or so. But if I wanted to take the profit right away, do not create a duplicate by creating closing order down here. Instead, what you want to do is you want to manipulate your existing sell order. So I'm just going to right click, do a cancel replace. I'm going to open the bracket. And it looks like price has dropped a little bit, but this is 902. Tell you what, I'm going to change these to 9. I'm going to change these to
950.
All right, we can do 950. Right, 950 is fine. So I'll do 950, and I'm going to confirm and send. So when the price reaches $9.50, right now it's at 902, and I believe it's because it's retracing back and forth here a little bit. Yeah, but we know that it has potential to go all the way up. So at 950, it is going to close us out. You don't have to do anything about it. So for those who have not traded options, we went over a lot of things, and there's plenty of stuff in between. There's plenty of stuff in between, and you're wondering, how do you pick up all of these? What do you do first? When do you do it, right? And that's what I teach. I teach options. So this is a little bit of a commercial here, and we will break down everything from the fundamentals. Even before we make our first live trade, we're going to break it down and understand all of these things before we put it all together in one in a trade. We want to make sure that we've covered all the bases, or most of the bases, as much as we can. And that takes about 8 sessions at Options with Eddie. Somebody put a link there for me, please, about how to get to me. Thank you there, Marlon. So this is how we do. How does it say is the secret sauce, right? Thanks. But we've helped hundreds of students master this, make consistent weekly income. That's what we're trying to do. We're trying to be consistent in terms of our success. We know that life is not perfect. So for the times that we don't make a winning trade, we make sure that we don't lose a lot. So if you're making 7 or 8 times out of 10 successfully, then the 3-4 times or the 2-3 times that things are not working out. You want to come out with a loss that's not going to hurt your account. That's the objective. That's what we want to do. So questions on that, or anything that we've talked about, or any question in general?
So Eddie, when you're looking, like when you're creating your watch list, I try to stick with just, we talked earlier, I was doing just one, but I'm expanding that. So when you're creating your watch list for these, for buying the options 45 to 90 days out, are you looking more so at the ATR of how much they move in a day to choose? Are you looking at, just a combination of like, the premiums that are there, the price?
Plenty of things. Good question on that. When I'm building my watch list, and remember, I've got 2 watch lists, right? The one that you're looking at right now that does not change. Yeah. And those are not necessarily the things that I trade, but they help me understand the market very well. And when I build a watch list, there are several criteria that I want. And number one, the ATR that you mentioned, it needs to be at least 5. Right? At least 5. So the reason I want at least 5 is because I want stocks that move and move a lot. So the higher they move, the better for me. That usually means that those stocks are a little bit more expensive, right? That's what that usually means, because those that move a lot, they tend to be more expensive. But that's not a problem, because we have strategies that teach us how to trade those for not a lot of money. Right? That's something that I teach.
Okay.
The other key ingredient of a good watch list, or the stocks inside of a good watch list, is that each of those will have good liquidity and volume. Right? Meaning that they are traded at least 1 million, 1.5 million times, because the last thing that you want is to enter a great trade and then you're unable to get out of it because nobody wants to buy it, or there's not enough people to buy it. So we're talking volume here, right? And then, of course, if you meet those 2 criteria, then the next criteria really doesn't matter, because you're looking for stocks that are worth at least $10, right? Why is that? We don't trade penny stocks. No. Yeah. You also want to keep away from foreign stocks that are controlled by foreign governments. Baba used to be one of them. I think it still is. So I don't trade Baba for that reason. Yeah. Anybody who knows who Jack Ma is? Anybody know? Everybody in China knows him. He owns Baba, right? Yeah, but occasionally he goes missing. Yeah, courtesy of some government somewhere, right? But stay away from stocks that are manipulated, or stocks that the US government thinks are, against American interests, because they can be shut down at any time. And we've seen that in the last couple of years, where stocks just disappeared all of a sudden. I don't know what happens to people's money, but why bother with that? The other kind of stocks you want to stay away from are the meme stocks, right? Yeah, Cheryl says the guy who went missing, Jack Ma. Yeah, she's in the news. Things like AMC. Is AMC still one of those? Or BlackBerry or GameStop, I think. I haven't looked at those in a while. I should probably look and see. What's GAME? Is it GAME? AMC. Okay, yeah. So you can see you can see some of this. Yeah, this is not good. What's the other one? AMC. Oof. Look at that. Oh, GME. Okay. GME, not J. Yeah. Yeah, stay away from all those odd stocks. You don't want to take those things that those teenagers on the internet are playing with. Yeah, they'll take you down slowly. I mean, quickly. So, all right. Well, guys, it is Saturday. So, anybody got plans? Anybody got questions? Anybody wants to get more information about how they can join my tribe? Amazon wants to buy AMC. Is that right? Okay. Well, good for them. Yeah.
Hey, I have a quick question.
Hey, Cloud.
Do you ever, how you doing? Do you ever enter an options trade on the 0 DTE time frame?
Every day.
Oh,
Every day.
okay, so you are
I'm a day trader.
premiums with zero DTE.
Yeah.
Okay.
So I teach swing trading, which makes people plenty of dough. But I also touch on day trading a little bit. I don't recommend it for new students though. So once you're a seasoned trader, you've been trading for a little while, then you tend to do closer to zero, not necessarily just zero. But for myself, I find that I do a lot of 0 DTE, but I also do a lot of 1, 2, and 3 DTE. I usually go farther out depending on my confidence level in a trade and also depending on the time of the day. So my 0 DTE trades are usually going to be somewhere between 9:30 and 10 o'clock. I'm in, I am out. If I am getting into the market at 10:30, 10, whatever, after that time, then they're no longer 0 DTE because I don't have more time. Instead, I will do at least 1, 2, 3, most times 7. I like 7 and 14, by the way. So Cloud, there, if you're a day trader, you're doing shorter DTE. If you're a swing trader, you're doing more DTE, which is the preferred way to do it. So it has been proven for a long time that the more you stay in the market on a good quality trade, the better your chances of success. There is a lot of risk for 0 DTE. So if you don't know how to trade 0 DTE, you don't want to trade 0 DTE. Does that help?
Yeah, that explains a lot.
And especially on SPX, S&P 500. Yeah, you want to stay away from that if you're a beginning trader. Yeah.
Okay.
Yeah.
So if you go 7 days out, 14 days out, in your experience, are you normally exiting and taking profit, before your 7 days, 14 days?
Almost all my strategies, I take profit before the number before the word DTE. So on a 7 DTE, usually my strategy will take me out either same day or next day. Remember, it's a confidence level, right? I'm simply buying a little bit of insurance to say that if I am wrong, then I've got this many days to weather the storm. The intent usually is not to stay in that long.
Gotcha. Okay.
Yep. So 45 to 90 is actually my favorite for equities. And then if you're trading indexes, SPX, NDX, DJX, those kind of things, RUT, then you want about 7 to 14 days, give or take. Cool.
Okay. Appreciate it. Thank you.
Sure. Cool. All right. Class begins. When does class begin, by the way? Class begins next. Somebody's asking here. I forgot my dates. April the 4th is the next class. Yeah. Somebody's asking here in a DM. April the 4th is the next class. So cool. All right, guys. Well, if there are no other questions, then we'll probably see you in a couple weeks, right? Yeah.
Thanks,
Weeks. All right, guys.
Bye.
All right. Bye-bye.
Thank you.
Thank you.